Today's highlights. Trading volume is dropping, capital is contracting, and sentiment has hit rock bottom. Is this cooling off in the crypto world just a build-up for a comeback, or is it a complete freeze? Ethereum ETFs have been falling across the board for 3 consecutive days. Why has BlackRock become the main force behind the sell-off? USDC settlements are about to be available across the United States. So why did Visa choose Solana as the infrastructure for its initial launch? December 17th, Wednesday, this is the BTV Chinese channel. Where is the B-face? First, let's take a look at the must-watch data headlines from the crypto world over the past 24 hours. As of 12:30 this afternoon, the price of Bitcoin officially fell below 87,000, dropping 1.4% in the past 24 hours. So, what has the market been like throughout December? In a word, fewer people and lower trading volume. So let's take a look at centralized exchanges. The total trading volume on all centralized exchanges is 191 billion, with Binance still leading at over 50 billion. However, the cooling off in ETFs is especially noticeable, with only 39 billion in volume left. Compared to the peak in November, when the trading volume on CXs was 263 billion and ETFs exceeded 50 billion, it's clear that capital is now flowing out. What kind of signal does this send? Actually, it's not that people suddenly lost faith, but rather that risk appetite is decreasing. The money is waiting, listening, watching, and analyzing the market again and again. Instead of pushing upward, it's now moving sideways and consolidating. So things are gradually improving, which is why I think it's still too early to conclude that we're in a bear market. This kind of shrinking volume and decline is more like after the previous intense conflict, now the market is just taking a breather. The overall trend hasn't changed. US interest rates are still set to go down and Trump's policies haven't reversed either. So once the funds return, the first place to heat up will be, let me sum it up in one sentence from the crypto world. Right now, the entire crypto market is collectively stepping on the brakes. What is the Bitcoin Fear and Greed Index today? It's at 11, which means we've entered the zone of extreme fear. So in the short term, funds are fleeing as fast as they can, but seasoned players all know that this kind of position is usually not the starting point of a new round of declines. It's more like the tail end of a panic sell-off. On our show, we've always been keeping an eye on one thing for everyone. Where exactly is the money coming from? That's why on-chain data is very honest. Let's take a look. In the second half of the year, the issuance of stablecoins on Ethereum has indeed been increasing, but the speed at which new money is entering the market has slowed down, especially when we look at the 60-day market inflow. In November, the inflow was 15.3 billion, but what is it now? 4.8 billion. So you can see that marginal capital has already hit the brakes, so it's only natural for on-chain activity to cool down and for the market to pull back. The number of active Bitcoin addresses has now dropped to its lowest point in a year, which shows that those short-term traders who buy high and sell low repeatedly are retreating. So, who is left in the market? The long-term holders and the coin accumulators are still here. In this kind of environment, where there are fewer people and less money moving around, prices become especially sensitive to news. But the upside is that there's less noise, so the supply and demand relationship starts to show its greatest influence. On the surface, the market looks quiet, but in reality, it's more like making room and slowing down in order to accelerate even faster in the next phase. According to the latest data, the short-term returns for both Bitcoin and Ethereum have all turned negative today. This shows that the recent surge was too aggressive, and now both the top two coins are hitting the brakes and taking a break. Bitcoin is shifting gears around 86,000, while Ethereum is running alongside at around 3,000. This time, it was mainly Bitcoin that dropped first, which then led Ethereum to cool down as well. But this time, it's not that the market is about to crash. Structurally speaking, last week the 30-day correlation between the two major coins was over 85%. But starting from this Monday, they've begun to go their separate ways. However, Ethereum's temperament hasn't changed at all. Its beta coefficient is close to 1.3. What does that mean? It means that whenever Bitcoin rises, Ethereum will rise even more sharply. Of course, when Bitcoin falls, Ethereum will also drop even more. So right now is not the time to be bearish on Ethereum. Rather, it's digesting its gains and slowing down the pace, waiting for the start of the next wave. Once the market direction becomes clear, all right, please give us a like. Why should you like our content? We've been updating daily for over 4 years. If it weren't for more than a decade of experience in this field, we wouldn't have made it this far. But every like from you is also a reason for us to keep going. Today, in the headlines, let's talk about Ethereum, or rather, Ethereum during the Christmas holidays. Every year when the West celebrates Christmas, it's like a Black Christmas for the crypto world. Because when the US goes on holiday, liquidity dries up and the market becomes very fragile. So during the Christmas holidays, how do institutions move? That's even more important than how retail investors see things. Because 2 years ago, when traditional giants like BlackRock rushed in, everyone saw that just 2 treasury companies pushed Ethereum from $2,000 to over $4,000, right? So for a while, people thought Ethereum had a solid floor, that at least after institutions entered, the selling pressure wouldn't be so great. But now the data has changed. Institutional money isn't as firm as we imagined before. Their attitude is starting to loosen. To put it bluntly, now only the whales are holding things up. The smart money and institutional funds are quietly pulling out. This kind of change is even more unsettling than a sideways market.
The US spot Ethereum ETF saw a single-day net outflow of $224.94 million, hitting a recent high. Among them, BlackRock, which is seen as a major bull player, accounted for an outflow of $139.26 million, about 61% of the total outflow that day, becoming the main source of selling pressure. This sends a clear signal that institutional sentiment has turned noticeably colder.
Portfolios, I've got to make sure you can handle redemptions and creations. I have to ensure your beta remains consistent, so I do think you'll see more of this in ETF efforts. Listen, I believe the ETF wrapper is, in many ways, the future because of how people build models and approach investing.
Grayscale's Ethy had a net outflow of $35.1 million. The Bitwise Ethereum ETF had a net outflow of $13.01 million. US Ethereum ETFs experienced net outflows for 3 consecutive trading days, with no inflows. Over a longer period, November's cumulative net outflow was approximately $465 million, suggesting institutional buying retreat is not a one-off event.
Actually, when it comes to Ethereum, I think there's a very clear bottom fishing signal for everyone. Whose moves should we watch? BlackRock. On the 12th, I was still at the Bitcoin conference when I saw the news that BlackRock had bought $23 million worth of Ethereum. I suddenly thought, maybe it's time to buy the dip, right? But 3 days later, that turned into selling pressure. So judging from BlackRock's attitude, it now seems that Ethereum might still have further to fall. First, convert your Ethereum into USDT or dollars and see if you can pick up cheaper chips later. So before BlackRock starts buying in continuously, we can also stay on the sidelines and observe. It's never a bad idea to follow the big players. I've given training to many entrepreneurs going overseas on how to understand and use digital assets. I tell everyone, 99.9% of people, after learning, would rather pay high so-called currency exchange fees. They never go back to the traditional SWIFT system. Never mind the high costs. What's worse is that you have to wait 1 to 5 business days for your money to arrive. But with USDT or USDC, the transfer is almost instant, and the fees are so low, they're practically negligible. And you can even write them into smart contracts, eliminating a lot of the back and forth processes and costs. Now we see major players like BlackRock already aggressively pursuing tokenization, and PayPal has directly issued its own. Traditional finance is now getting seriously involved. Master was the first to dive into the crypto space, and now everyone can search for MyPay directly in the Apple Store or Google Play Store. Remember this logo because there are already fakes out there. This is the most legitimate crypto card under the Method brand. Second, Visa won't be left behind either. Visa is teaming up with all the major payment giants to make a big move.
Visa has officially launched USDC stablecoin settlement services in the United States and has chosen Solana as the initial blockchain infrastructure. This move means that Visa's partner banks and acquiring institutions in the United States can now directly use USDC issued by Circle to settle with Visa, no longer relying entirely on traditional USD wire transfers. The market responded quickly. On the day the news was announced, the stock price rose by 7.67%, and Solana also benefited. This shows that stablecoins are entering the core processes of mainstream payments.
Do you know why this news is so important? Visa is really making a bold move here, overtaking SWIFT on the curve. If American banks start using this for settlements now, the traditional payment system is about to be revolutionized. For those companies and countries that are members of the USD-based or SWIFT system, won't they also have to switch to USDC to keep up? So let's think this through. What about those countries or institutions that have issued documents banning the use of stablecoins? Where do they stand now?
Here, there are legends of overnight riches, as well as carefully orchestrated scams.
This is a dark forest of chaotic development, but it also nurtures the spark of hope, leading to a brighter future. The destination of faith is freedom, and the endpoint of consensus is equality. This TV show will guide you through the fog to see the future, and together we'll slowly
become wealthy.
Market data shows that the rate of coin holding among the British is starting to decline. So, is the reduction of retail investors a sign of market maturity? Bitcoin's volatility will be even smaller than Nvidia's. There are already signs in 2025, but how volatile will things get in 2026? All right, let's take a look at the UK. In my opinion, the UK is even more conservative than Japan when it comes to cryptocurrencies. However, the UK's regulatory body, the FCA, has just released 3 documents in quick succession over the past couple of days. In other words, they're consulting on how to regulate exchanges, asking everyone how to tax digital asset interest, and considering how to approach the regulation of crypto activities like lending and DeFi. Their attitude is very straightforward. The timeline is set for February, during which they're seeking input from capable individuals on how the government should formulate regulations. Coincidentally, on the same day, the FCA also released data from a UK research agency showing exactly how many people in the UK hold digital assets. It's basically saying, let me see how many people fall within this scope and then decide whether the regulations should be strict or implemented quickly. The message is very clear. In the UK, the question is no longer whether to regulate cryptocurrencies, but that action needs to be taken right now.
Is now acting to realize the benefits of crypto technology. The government and regulators are working to bring clarity to the industry. They're engaging with leading players, both homegrown and global. And that's a huge step forward. We're already starting to see results, with leading UK financial institutions exploring what crypto means for their businesses.
A survey of 2,353 adults reveals crypto ownership in the UK fell from 12% in 2024 to 8% in 2025, still double the 2021 rate. The FCA noted the market shifted, fewer small speculators, more medium to large-scale funds. 21% hold positions from $1,343 to $6,728. 11% hold positions from $6,709 to $13,416. Crypto market becoming more retail-oriented.
So the data from the UK says that there are fewer people in the UK playing with crypto, but I don't really think that's the case. What everyone needs to understand is that no matter how much the government tries to regulate, they can only regulate those centralized institutions that have legal entities and actual operating locations, like exchanges, fund companies, and so on. But if I move my assets on chain, may I ask, what do you use to determine who owns these assets? How do you assess the taxes on the income I earn on-chain? Only if I declare it myself will you know that I'm involved in digital assets. And as for this data, it says that among Bitcoin holders, 57% are British, Ethereum accounts for 43%, and Solana makes up 21%. So in my view, all these figures are just marginal data. They don't represent the whole picture. So you see, many institutions, especially governments like the UK, can stamp 13 seals and have 15 ministries issue joint statements. But where are the actual tools? If you drive away the exchanges and ban all crypto trading, what tools will you use to measure transactions made with digital assets? For example, if I transfer money to someone and they transfer something back to me, aside from knowing that I made a transfer, you usually can't monitor USDT transactions beneath the surface. So everyone needs to understand that digital assets represent a financial revolution that starts from the bottom up. As long as you don't back down, the ones who will retreat are them. Bitwise, the procurement company that became famous thanks to Ethereum, didn't show up at any of the 3 summits in the Middle East this time. But this company's ability to stir things up hasn't diminished at all. They released a crypto prediction for 2026, raising 3 ultimate questions. The first, will the 4-year cycle still lead Bitcoin? Is it going to fall or rise? Can it still hold its price steady? Second, will the US stock market rise along with it or fall along with it? Can it really be tied to the fate of the crypto world? So after reading their report, everyone realizes that the old playbook we've believed in for so many years might really be outdated now.
In its 2026 outlook, Bitwise clearly points out that Bitcoin is breaking free from the traditional 4-year cycle of rising for 3 years and falling in the 4th. According to historical patterns, 2026 should have been a year of correction, but Bitwise believes that the halving effect is diminishing. The probability of interest rate cuts in 2026 is rising, leverage levels are decreasing, and the regulatory framework is maturing, all of which together are weakening the logic of the old cycle.
In the last 6 months, Bank of America, Morgan Stanley, UBS, and Wells Fargo have all greenlit crypto exposure. It's like $15 trillion that are now open. Vanguard just greenlit crypto exposure, and Harvard has tripled its crypto exposure. This is a more powerful narrative than anything that drove the 4-year cycle in the past.
At the same time, major institutions like Morgan Stanley and Vanguard have begun systematically allocating to Bitcoin, and the continuous capital inflows brought by spot ETFs have become a new long-term driving force. The report also points out that Bitcoin's volatility has been on a steady decline over the past decade, and in 2025, it is projected to be temporarily lower than Nvidia's ETF. The expansion of the investor base is a key reason for this. In addition, the correlation between Bitcoin and the S&P 500 is expected to continue decreasing, and its pricing logic will gradually return to the fundamentals of crypto assets themselves.
So, to sum up Bitwise's 3 principles, the crypto world is now in a more mature phase. In the past, it was driven by retail investor sentiment, but now that institutions have entered the market, the price increases won't be as wild. You can still make money, but your heart won't be racing as much as before. Another point they make is that Bitcoin will no longer be so tightly bound to the US stock market. It won't follow its every move. Once interest rates ease, regulations stabilize, and institutions start investing real money. Their prediction is that by 2026, there will be a basic inflow of tens of billions of dollars into the crypto market. In the words of Bitwise's chief investment officer, if things continue according to this script, 2026 may not be the craziest year, but it will most likely be the most profitable one.
This time, Michael Saylor put it very bluntly. Quantum computing is not here to destroy Bitcoin. Instead, it's here to help upgrade the system. All the coins that can be moved will be transferred into safer vaults. Coins whose keys were lost long ago will simply be sealed in place. No one will be able to touch them. The result is greater security and even less liquidity. OpenAI is currently negotiating a massive deal with Amazon, not only seeking at least $10 billion in real cash, but also planning to directly use Amazon's own AI chips, according to insiders, if this round of negotiations succeeds. OpenAI's valuation could soar past $500 billion, officially joining the ranks of AI giants, leaving its competitors far behind. The Hong Kong GPX fraud case has not yet reached its showdown. The court has agreed to postpone the trial. The prosecution's reasoning is straightforward. The case is too large, there are too many materials, and the files are still being organized with overtime work. According to Techanesia, Tencent Cloud has reached a strategic partnership with the Bitcorp Group, which operates a leading digital asset exchange in Thailand. Moving forward, their trading system, database, and even artificial intelligence will all be powered by Tencent Cloud's solutions. According to Soso Value Data, the net inflow for XRP Spot or ETF reached $8,540,000 that day. Although the pace isn't exactly frenzied, it at least shows one thing: XRP hasn't been crossed off institutional investors' allocation list yet.
As you all know, many top traders from the Binance ecosystem attended Binance Blockchain Week. Among them, some have been very successful, while others have failed badly. If we sum up what they have in common, it's that they're all the type who stubbornly hold on. Especially when the contract market drops, their first reaction isn't to cut their losses, but to find excuses for themselves. If the price drops another step, they start to go head-to-head with the market, thinking that as long as they hold on, it's a sign of conviction. But by the time they finally have to admit defeat, their account balance, or rather, the liquidation result, has already made the decision for them. Especially in spot trading, many people mistakenly think they're trying to prove they're right. But in reality, the market doesn't care whether you're right or wrong. It only cares whether you've survived by following the rules. If a trader's goal is to prove that their judgment is correct, then they're especially likely to keep adding to their position in the wrong direction. The more reluctant you are to cut your losses, the more likely your losses will spiral out of control, turning from manageable to irreversible trades. You have to understand, this is never a debate competition. Winning doesn't make you the king. Instead, it's about retreating in time when things aren't going your way, and decisively stepping in when opportunities arise. The people who can truly make money in the crypto world over the long term are not necessarily those who predict the market most accurately, but those who know when to admit they're wrong and when to move on. There are new opportunities in the crypto market every day, but what's the prerequisite? Is the USDT in your account still there? Is your principal still there? The market does not reward stubbornness. It only rewards those who are flexible and follow the rules. If you understand this, give us a like. That's all for today's program. Here are all our membership benefits. We hope you can become our member so we can work hard together and grow our Bitcoin holdings. Let's gradually become wealthier. See you tomorrow.